Workhorse, and this is WKHS stock. So let's take a look at this company, and then their chart is kind of a parabolic chart right now, so it's going to be an interesting one to look at. But I just wanted to kind of scroll through and show what they do. They have all electric delivery trucks, and then those trucks have drones that can deliver, and then apps to track. So and basically, the truck can do a much smaller radius, kind of a local route, and it's all electric. And then for deliveries that are kind of way out of the way, the truck doesn't have to drive there to deliver a package. You can just send the drone to deliver a package. So that's kind of the idea. And yeah, the app, they have apps to track. And then these are the trucks, pretty standard looking. It's a normal driver, and they're working with UPS and Amazon right now, trying to test some things out. And it has a little bit of a lower floor than a normal truck. So all electric is the main point, and a drone launching top is the thing that's really cool. And so they've been working with UPS and Amazon. There's no press release on here, but Amazon in London. And so their latest press release is just on COVID with the hospital. Yeah, let's jump over to the press releases. So here's a 2017 press release with UPS. So this is an old one, but I just really wanted to show some pictures. All right, so here's a cool quote from Stephen Burns, their CEO. It's wonderful to see it applied, whatever, but the drone is fully autonomous. It doesn't require a pilot, and so the driver can launch the drone and they can go do other stuff while the drone's making a delivery that's kind of out of the way. And so for a few years, they've been making kind of UPS branded trucks here, and you can see the drone launching spot on the top. And the UPS driver can, just set up a package and launch the drone, and the drone's autonomous. And then similar stuff here. So this is a couple years ago. So they've been trying to work with UPS for a few years. And here's their latest press release from this year, still working with UPS. I think those are the most interesting ones. But this is just a couple months ago. And so they had a COVID related press release here. And the big question that everyone's asking as the plague is sweeping across the earth is, how can drones be used? So the they're just talking about, they've already had some hospital related testing, and so they're just continuing testing. This is where they are right now. They're still testing drones. They're still testing vehicles. And so Workhorse has some more drones in testing with relation to, some hospitals, flagship hospital in Raleigh. And Drone Up is a data related service. So they're still trying to test services, and this could be useful for medical deliveries as well as sort of out of the way deliveries. And so that's where the company is. They're capable of manufacturing and producing vehicles. They don't have any, client production in place. They're still just in a testing phase. But this is not like a SPAC company that's brand new. Let's look at the balance sheet and then I'll go to the chart and show you. This is a company that did normal IPO, and they've been developing for quite a while. All right, so for the balance sheet, so you just go to investors, then you go to SEC filings, and then they have a 10Q from May, so about a month ago. Not super recent, but it's a pretty recent quarterly. So here you go, Form 10Q filing, and this is for the first quarter. Workhorse Group, and come down to the balance sheet. All right, so we have cash, and this is just in regular dollars, so 16 million cash, and total current liabilities almost 40. So they're upside down cash to liabilities on current kind of debt by a little more than half, which is not pretty, but it's a lot better than a lot of the other companies that we've seen that aren't profitable yet. And so this company is still in development. and they do have debt and they have enough cash for the moment. And then if you look at their total current assets here, yeah, 24, and total current liabilities 40. So I was trying to look at the total assets here. It's 44, and they don't have a section for the liabilities separate from their stockholders. So we have to do some quick math here. The stockholders is 21, and the total liabilities is 44. So their book value is positive as far as if they've had some kind of bankruptcy risk or something like that. It's not a negative book value. Assets to liabilities and stockholders is about even, but stockholders about half of that. So um, their long-term assets to liabilities like 2 to 1, positive book value, and then their sales are way down now, way down, and their their income is a net loss. That's all R&D of a lot for yeah 4 million. Their cash is 6 million. Yeah, so this balance sheet's not pretty. It's a company still in development, and they've been testing these vehicles for 3 years with drone deliveries and things like that, and they don't have any real contracts or manufacturing or service routes set up yet. So this balance sheet's not great, but it's better than some other balance sheets that I've looked at for sure. So yeah, as far as fundamentals go, this company doesn't have good fundamentals, just like almost every company in these kind of sectors. But this is a real company that is making vehicles and actually testing with Amazon and UPS and things like that. It's not just like a hypothetical brand new company that's coming on. And we've seen them do some kind of parabolic jumps before. So this section here is interesting to look at on the graph. And let's take a closer look at what's going on right now on this chart. So yeah, I mean, as far as fundamentals go, um, yeah, like not not good from like a value perspective or something like that. Um, as far as the sector goes in terms of electric vehicles, I way prefer this to kind of the commercial electric vehicles because because right now, I mean, we have all the auto loans going bad. It's a flood of vehicles coming onto the market. We have a bunch of rental car companies downsizing or going bankrupt as a flood of new vehicles onto the market. We have, Tesla and things like that coming up, and we have the other auto dealers all around the world coming out with electric vehicles. So there's a lot of competition in the electric vehicle space, and there's a ton of oversupply coming in from the gas vehicle space. And it takes 10 or 20 years to kind of rotate. If we are rotating to electric vehicles away from gas, it takes like 20 years to rotate all the gas vehicles off of the road. But right now, it looks like a huge oversupply of vehicles in general, and at the same time, way less demand because people are stuck at home and we're shifting really fast into working from home and traveling less. And that looks like, that's a trend that should go up, but it should be, I mean, a long-term downtrend that just got accelerated. So all of that looks really bad for the auto industry in general. And then, if you look at the profitability of electric vehicles is way lower. They're more expensive to manufacture and produce, and they're just less profitable than gas vehicles have been. So it looks like a really difficult sector to be profitable in fundamentally, but nobody's trading fundamentals right now. Stuff is crazy, and so that's what we're going to look at is some crazy stuff. Um, and so this thing is off kind of on a little parabolic thing, and it's sort of a double bubble. We have sort of this kind of bubble floor here, and then I wanted to draw, and this is going back just like the past month, this thing's been taken off, and it's in an interesting spot here. So there's a couple ideas I had. Um, we have like a sort of takeoff zone here, which is reasonable, and then we have this area, which is sort of a bubble on top of a bubble. And so I wanted to look at sort of a bearish and bullish kind of outlook and see what sort of trading patterns to look for, sort of for day trading and swing trading the bubble. And we just saw in the chart that this thing has a history of kind of parabolic bounces uphill. Right, so where are we? So this is one idea of a parabolic kind of move that we've already broken through and sort of back tested, and that would be a bearish looking formation that would have a downward target back to this one, but not much of a trading signal. If we're just kind of back testing sort of a bubble thing, you would just be looking for sort of like a double top and come back down to here. But I think a more interesting line to look at is this, which is, are we still in a bullish trend now? And that's what we want to see. And so if we do break down below here, especially back test it, then that would be the same kind of bearish look as the other trend line I was drawing there. And that's really a price target kind of. You want to break down here towards $8 a share, and then get stuck. Like if you can't get above like 8, if you get nine's even a little high, like 8.75, just kind of this thing. Like you break down towards 8 and then you can't get above like 8.75, that would be a bearish indicator that you're coming down off of this bubble down to this one. And then you have to see what kind of action you get down here. But that's sort of the day trade, swing trade kind of look on a bearish case. And so that's the thing to look at for the next 2 days, is if it breaks down kind of below this area down around 8 or somewhere, if it gets a bearish kind of setup, or if this thing flags out here and stays above this line. And so if you get a general pennant here, and this, if you can get a pennant that's up, so it has traded up above this peak already now. And so if you can get a higher floor kind of pennant that's above that peak, that would be a good bullish look. And then you'd be looking for it to run into this trend line over here in a couple of days. And then if you can get a positive bounce off this trend line, that would set up potentially another really good run. And so that's sort of the technical look at where it is. It's in a bubble. It has bad fundamentals and everything like that. There's definitely some danger and all of that from the fundamentals and the technicals. I mean, bubbles you can just rip down out of here, but they're interesting to trade when you get these kind of hypey movements. When you get a good trend line. And so this is a good technical setup here to potentially continue up on this trend line. And we'll see if the action does this kind of setup for a bullish setup. If it kind of breaks down, that would look, bearish. So that's the two things that I would expect to be the most probable kind of outlooks, and they're both pretty easy trading setups. So that's kind of a cool thing to look at here. And yeah, as far as electric vehicles go, I really like this sector for deliveries that could actually be profitable for for large delivery companies. And online shopping and ordering is a sector that's growing. And so this is not really competing with that huge mess of retail vehicles and all of that complicated stuff that's going on. They're just trying to get a tiny little foothold into, whatever UPS and Amazon deliveries. And so if they can manufacture pretty much anything for those companies, it could be pretty good. Like if they just, they don't even have to manufacture the trucks. They can just manufacture drones. They don't even have to do the delivery apps. Like they're trying to do all three, the trucks and the drones and the apps, but I mean, if they just can get a drone contract with UPS or something, that would be huge. And yeah, they've been testing it for 3 years. So UPS hasn't told them to go like screw off. They've been working on it for a few years, and it's not ready yet. But it's a really cool company. And so let's um let's jump over to the S&P and see what kind of overnight, just kind of it closed. Where was the close? Down here. Oh, and it did like a little swing down below this area. So yeah, basically I want to take a look at a couple key trend lines right now. So we do have some bearish momentum right now. We have a lower low that's flagging out. So that's a bearish. This is a bearish looking pennant right now. And this is this is a key moving average. So just this kind of whole area, we have this downtrend kind of running into the moving average here in today's trading. So this is all one area now. And this is a huge spot where we've gotten major moves. This is the long-term moving average. It's a 120-day. And that's what I like to use for the long-term average because you actually get a ton of action off of it. You get the basic long trend, but it also kind of hugs a little closer where you react off of it. Um, and you can see here on the uptrend, we went crazy all over it, and then we bounced off the top of it for this part, and then we came down here and bounced off of it again, and now we're coming down to it again. And so I would expect the bearish momentum that we have now to pull us down to this thing today, and that's just like a little move into this. But as far as like a bearish continuation, I don't know. This is not a standard kind of pennant continuation setup. So generally a pennant like this will favor the direction that you came from. So like 60-40 bearish. Um, and if you're in a bear market, it's maybe 70-30 bearish or something. It's more bearish if you're in a bear market. But right now we don't know where we are. So being above this long-term moving average in general is bullish market territory. And so we've just crossed over here. You need this to swing. You need this moving average to actually swing in an upward direction. You need to bounce off of it to actually get into an actual kind of bull market setup. It's not there yet. It's definitely not a bull market yet. We still have a downward long-term moving average, and we've gone above it, but we haven't like turned it up or bounced off of it or anything like that. So we don't really know from the averages if it's a bull or a bear market right now. And we're sort of in a bull market area, but a bear market general general average still. And then on the bubble model, this is a 2-year bull support line that came off the bottom of the 2018 crash, and this is a 12-year bull support line that supported the whole bull run from the bottom of the financial crisis in 2008. And so we're just in between two super major bull support lines. We got a big rejection off of this, which is a pretty bearish indicator. But really, in order to set up an actual bear market, like you need to get below this moving average and you need to get below this long-term bull market support trend line. So you need to get down here and sort of backtest this stuff and get below it. Like at this point, you could call it a bear market. And so that is kind of, like a 2-year kind of bear market area. Like if you want to call a spot to call it a bear market, like that would be it. So we'll see if we get trading to the bear side that starts breaking down or not. And then on the bull side here, there's not a whole lot of resistance. I mean, we have this zone that we've been sort of downtrending in. And so there's this area to look out for. And we broke down off of our bull market support line, or the bull run from the bottom of the crash back here. So we've pretty clearly broken down under this thing, back tested it. And so yeah, so I mean, a move up from here, up on top of this line probably won't happen. But in a bull market case, this is not super major resistance. Like if we're going to make a bullish move from here, you would probably expect it to break it. The bullish thing you're looking for is you want to pin it to be above this zone here. You want to get a bull pin it above this resistance zone. You got to break up through here, and then you need to do it again. You need to break up through here and consolidate and check off the top of this thing. So that, like, this is the area where you could call it a really bullish scenario. And this bull market support line probably doesn't matter anymore. We're kind of past it. I think it just chop it off here is a good spot. And so this general run that we did is shifting. It's shifting, and we're just in the middle of nowhere still. We're near a bunch of resistance to the bottom. And so a bear side trade from right here this is a tough spot to try to add any kind of bearish positions because we haven't seen if we can break through any of this stuff. And it's a ton of resistance, and there's not a lot of space for bear side moves right now. And then if you do slice through this stuff, most likely you're going to come back up here and test it again. That's a good spot to do a bearish position, is on a back test of, if you're hitting these from underneath and then there's not a lot of support on the downside, that's a good spot to look at a bearish kind of position. But right now it's already down and it's near resistance. So if you're bullish, this is a really good spot to add bullish positions if we bounce off of this, or if we bounce off of this one, because we have super high volatility, and you could get across across this whole zone. I mean, you could bounce off of here, and you can the bullish activities had that kind of angle, not like straight up, but you could pretty easily work your way back up here in a week or two on a bullish move. And so in a bear market, a long-term bear market case, I mean, you're looking to either break down through this stuff right now and get into a bear market kind of position, or it's quite common to double test these long-term support lines before you break down. So we just got one big test here, and we're breaking down, and it would not be weird to see to get back up here and test it again. And from there, you could break down into a bear market kind of area. These lines are relatively close together. And so, if you look at like a Nikkei bubble, or like the Great Depression or something like that. Like the Great Depression had a single reversal top point, and the Nikkei on all the trend lines was getting double hits. And that's kind of a thing to look out for. And in this breakdown, since the crash back here, we've been getting way more double tap kind of behavior that looks more like the Nikkei. Like you get this double tap here, you get a little double tap here, and so that's the action that we've been able to see so far. And then here we came back up, and this is a weird thing to break down through two long-term bull market support lines and then get all the way back up to the top one. Like usually when you're unwinding a bubble, you will stay under one line, get a couple hits, and then you'll break down under the next one. And so if it's going to set up into an actual bear market kind of scenario, it's already acting weird. It's making huge volatile swings across the whole area. Let me do the momentum and take a look at the huge range. So we have super high volatility, and we're in this crazy high volatility range that started back here in Volmageddon. So Volmageddon is where we got high volatility, kick here, and then we've crossed now all the way across this thing several times, and this huge bounce is way across it again in a short period of time. Like this behavior is absolutely crazy. And so we have this area up here on the bullish side, and we have plenty of volatility to continue a run to there in a short period of time. and then the bottom side is down here below the lows, and there's plenty of volatility to make a move down there too. And in the two extreme cases from right here, but we're in between these bull market support lines right now, and so a super dramatic move. Oh, who knows? I mean, the volatility is crazy. Like it can go big if it starts going. So really, yeah, really, this is a spot to just be careful because it hasn't really picked a trend. Like we're just starting to get a little bearish momentum. Okay, so if you take a look at the weekly candlesticks, this is like a 2-year outlook on the whole market. And so that crash right there, like just shoved the whole market down into bear territory. But this long run is getting close to pulling it back up into bullish territory. So for a bull market, you want this long-term one to get up into the bull market side of the chart, and then any waving stuff around on the bull market side would just be up, up, up on the bullish side. But right now it's kind of chilling out and kind of neutral, and it's near this middle line here. So on the long-term momentum, this is still bear market territory, making a pretty good bullish move. I mean, this is a pretty wide divergence. It's still moving up. So it's just a bullish move from bear territory still right now. That's what we've been doing for a while. It hasn't quite made it to bull territory yet. And then this bull run in terms of the couple of month outlook, we got all the way up into bullish territory and did a bunch of bullish stuff. And now just that candle on Friday just kind of pushed the angle of this down move enough to be a bearish move. We're still pretty high in bull territory. We're just starting to make a bearish move. And so this hasn't decided what it's doing yet. The long-term one, we're just kind of in the middle in terms of momentum. And then if we kind of swing down into the weekly 2-week outlook, it's bearish with a little divergence. So it's a little bearish, yeah, bearish, and bearish, and it's starting to try to swing up. So over the next 2 weeks, like this is a bearish trend, bearish momentum. And let's go to what's happening right now. And bearish, 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 bearish. So the short-term stuff still looks pretty bearish. And the longer term and intermediate stuff is kind of mixed and not really decided. And just right now, we're just kind of neutralizing, the off-chart stuff. And so the immediate bearish action is kind of neutral at the moment, and you can see it's just kind of flagging out. But it looks like a general bearish momentum kind of thing. And so this to me looks more likely to try to break down from this on the technicals and the momentum and stuff like this. This looks like a bearish flag that should try to break down, but if it can, who knows? Because there's just some serious resistance and then another huge one right here. And so we could see some crazy stuff here if it tries to make a bearish move. So this is just a really difficult spot to try to trade, really. This is a spot to be careful. And that's just overnight activity that we have right now. And yeah, the DXY is trading, so we can take a look at this. All right, so the DXY has been trading inverse to the stock market in general, and we have a decent bullish move in the DXY that's kind of holding up for the moment. And I've seen people saying that this is a bearish move and this is kind of a bounce that could continue to the downside, and that's possible. As of now, it hasn't looked like it's trying to turn over yet, but I wanted to jump out to like a weekly chart and show what the dollar has actually been doing since kind of the financial crisis. Because here's 08, we got a huge weakening of the dollar leading into the financial crisis, and then in this area things got really interesting because we had zero interest rates and a weak dollar. And so people all across the world took out a mess of dollar loans, and they expected the dollar to continue to weaken, um, which would make the loans easier to pay off. And it didn't happen. The dollar has, well, it did like a little consolidation and a pop, but it's had a general bullish trend ever since the 2008 crash, and this has made all the loans that everyone took out more and more expensive. I mean, you're trading, the exchange rate to trade your local currency for dollars to pay the loans just keeps getting worse and worse as the dollar is getting stronger. And so, yeah, we had this little consolidation and a jump, and now we're kind of in another consolidation zone here. And we had that really interesting swing that happened sort of during the liquidation crash. We got a big swing here, so we can see the zone, and this looks huge from 94 to almost 104, like a 10-point swing that just happened in like 1 month. Does look kind of crazy. But I mean, if you look at the moves that we've had since the financial crisis, that's actually not that huge in comparison to the stuff that we've seen. Like, this move is way crazier than that. But it does paint a really good zone when you get that super wobbly setup like that. That usually sets up a sideways correction for a little while. So that's what I would expect to happen. And we're just kind of in this area here for now. And so if it breaks down a little farther, that wouldn't be weird. Like, this is a pretty tight kind of correction zone if you drop like that. But I mean, even with a really tight correction zone, it still runs out into the middle of next year before it really has to do anything. But it's still a general strong dollar trend that has not broken down. I mean, even if you draw the lines out longer, like we're hitting support for a longer term bull market trend right now, kind of at the bottom of this and making a tiny little move up. So if you look in here like really close and try to use it to look at the S&P, whatever. It hasn't really been a leading indicator. It's just roughly swung opposite the S&P since this kind of crash and wobbly area. So it does look like a strong dollar trend. And I've heard the macro people like Brent Johnson and Gus Paul is kind of a strong dollar guy as well. They have a theory that the dollar is going to get strong and cause some problems. And I think that's a pretty easy theory because that's what it's been doing for 12 years, and the trend hasn't broken yet. So yeah, let's see. I mean, we're near the bottom edge of this area, so if this thing does break down, like actually breaks down out of here, that'll be a really interesting thing to look at in terms of the dollar theories versus like high inflation or deflationary theories or something like that. But this looks to me like a spot where the dollar is just going to continue to get a little bit stronger, which could be a bit bearish on our S&P chart here. And that's not something that's been a trend for a long time. That's just something that's been a trend recently over this area where the S&P and the stock chart are waving inverse. But that's all we really have on the off market here, because we're still just kind of in the middle of nowhere. There's a little bit of bearish momentum, a little bit of bearish trend on the financials. So I'm expecting a little bit of a bearish move here. But we're going to have to break through some serious stuff to get down into actual bear market territory down here. And so we might see that this week. We might see it. I mean, are we going to bounce out of here, or are we going to break down? This could be a pretty interesting week for setting up the next month or the next 2 years possibly. Yeah, so that's just kind of a look at the market and how to trade a hypey stock like Workhorse. Not investment advice, none of this, but if you're chasing one of those bubble kind of technical patterns, just be careful with your stops and don't get caught on a bubble crash and then and then the entire freaking world is a bubble right now, also. So it's crazy. And yeah, so happy trading.